All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wallner, host. I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussions here, just a quick look at Derrick's current positions as of our recording here today. Again, he is the head trader at T3 Trading Group. Derrick, happy Monday. How is your day going so far?
My day is not bad. How about you, Greta?
That's pretty good. Pretty good. Bit of a Monday. It's very rainy here, but I will persevere through the
I thought it never rains in Southern
weather.
California. Isn't that where you are?
That is a lie. That is a lie. But we're in 9 days of rain right now. It's crazy.
Oh, wow.
We're on day 4 of 9, so we'll see how it goes. All right, but anyway, let's talk about the market. Big turnaround happening today. The NASDAQ, as we're speaking, the NASDAQ and the S&P 500 are green. The Dow was just green, now has flipped back negative, so basically flat. Earlier in the session, there was red all across the board. So what do you think about the market here on this Monday?
Yeah, we've kind of been back and forth, green and red all day today, and currently sitting around unchanged. So market right here isn't giving you a lot of conviction, I don't think, in either direction. We've been in this really weird market pattern where the beginning of the week is very strong and the end of the week is very weak. I've seen over the course of my career these types of patterns in the past where Fridays are always particularly weak or always particularly short, or Mondays are weak or strong or whatever. But this has been kind of outstanding how long this has lasted. We haven't had a negative Monday for the S&P since August, which is incredible. Last Monday, we were really strong. Tuesday, we got some continuation. But then Thursday, we were breaking back down through support levels. And by Friday morning, we were gapping down into what I consider to be extreme downside extension for the market. That got bought back up. So if you look at the bigger picture of the technicals right now for the S&P and the NASDAQ, they're very neutral. And the other thing I like to look at in conjunction with the technicals is the flow of funds. And the flow of funds are also, I think, very neutral. There's buyers present, there's sellers present from the systematic community, depending on what strategy you're looking at. You have the corporate buyback bid that's currently ongoing, but you've got all these macro worries that I think are causing a lot of the long only and long short funds to be a little bit more bearish and engage in some selling activity. But it's interesting because it's really difficult to be a bear in this November, December period. It's just so much strength in terms of the seasonality here. But we discussed briefly last week, there's a lot of reasons to hate the market right now at the same time. So it's like you've got these more macro reasons, I feel like, on why you should hate the market. And then you've got the fact that the market's holding in because there's more buyers than sellers. And at the end of the day, there being more buyers than sellers is really all that matters. But I can't help but wonder, when we get through this period of like forced buying and bullish seasonality, if those macro factors begin to weigh on the market a little bit further. And the fact that we've seen just a lot of volatility in November instead of kind of a grind higher, which is more what you would expect, might almost be a little bit of a prequel to some weaker price action that I think we could see come mid-January.
All right. The big news of the week is that it is NVIDIA earnings week. We're going to get that report from NVIDIA after the market closed on Wednesday, right? Let me make sure. Yeah, Wednesday. All right. NVIDIA, as of today, down over 1%, 1.3%, 1.4% nearly, right under 188. So if you want to, see you pulled up your charts. That's great. Let's look at the chart and talk about NVIDIA's earnings and what you're expecting.
So NVIDIA is going to be a really important event. There's been some interesting things ongoing with NVIDIA recently. You have SoftBank selling out their stake, and that just could be to raise capital to invest more in OpenAI. But you got SoftBank all the same selling out their stake. You got Michael Burry coming out with these relatively large shorts in both NVIDIA and Palantir. And then you saw this morning that Peter Thiel sold his entire NVIDIA stake. We're talking about a $5 trillion company here, and I don't. When you look at like the forward PE multiple of NVIDIA right now compared to history, it's actually not very expensive. But the question is, do we see a growth slowdown? Do we see margins compressed? Do we see additional competition that comes in NVIDIA? Do we see a broader slowdown overall in the AI theme? In which case, a PE multiple is just a multiple. The multiple can stay the same, but if revenue and earnings growth deteriorate, then the stock ends up at a lower price. And we are talking about a $5 trillion company at this point. So, in terms of just measuring NVIDIA based on previous forward PE, I don't think it's necessarily expensive, but I've got some concerns here. And clearly, so does Peter Thiel, and so does Michael Burry, and so does SoftBank, and so does some other smart people. At the end of the day, the technicals tell the story. 180 is the key level. 180 is the key level for NVIDIA. It was so important in October. And I think that was the period here. When you look at this kind of 185 resistance that NVIDIA had in October for a while, I think that was actually SoftBank selling their stake. And once they were done selling their stake, you had this big run higher in the market that led to their tech day that they had in Washington, D.C., which has basically ended up being the top of the stock at that point. And it hasn't traded well since then. But 180 is the key spot. And I'll tell you why NVIDIA is so important. Obviously, it's the largest market cap of any company in the history of the world. But 85%, I think, of the S&P's gains are coming from AI this year. And I think if you were to strip out AI from the economic numbers, you'd be looking at GDP trading at around 0 for 2025. So it's this circular thing of NVIDIA being so strong, AI being so strong, that's holding up the stock market, that's creating a wealth effect, that's holding up an economy that otherwise is doing very poorly. And if you take out the AI factor, if we ever lose this, then all of a sudden you got big problems. And I think we've discussed in the past, I do think that AI is in a bubble, but that's not a timing signal, right? I can't just say, hey, AI is in a bubble, so everybody go max short their account right now and get ready for that 180 break of support and let's make a lot of money. I don't think it necessarily works that way. That's not a timing tool. The technicals are a timing tool. So we'll see if there's any cracks in NVIDIA on this earnings report. I'm not certain that there will be. And then watch 180 on the downside. If we really get below it and hold below it, you're looking at a character change for the market. And that character change for the market could overwhelm the buying that's coming from the corporate buyback bid and everything else. That's how we really deteriorate lower. But I still think it's more of a 2026 story.
With how earnings season has gone so far, NVIDIA, of course, at the very tail end of earnings season, it's the most important report for this market, but comes at the very end. But you have a lot of, reports over the past few weeks to kind of gauge how market reaction might be to this report. Of course, it could be totally different because it's NVIDIA. But with that backdrop of what we've seen from all of the other Mag 7 companies, what is that? How are you approaching this report any differently than you would, based on just the chart?
No different. It's been an interesting earnings season, which, by the way, we called this earnings season pretty perfectly, you and I on the show here, about seeing a lot of beats, but not seeing great reactions. And that's really, for the second time around 2 earnings seasons in a row, kind of been the story. I think that the amount of companies that are beating on EPS and revenue are higher than in a typical earnings season, but the reactions from the market are not great. You have to have overwhelmingly a phenomenal report in order to get your stock higher, or for a few names that were actually beaten up. It's an interesting market, right? Because we've been more or less sitting at all-time highs, but if you type up a lot of stocks, you'll see that there's a lot that are sitting below their 50 moving average, that have been trending down, that are at 52-week lows. So some of the beaten up ones have actually had okay reactions, but I think on average, it's been an earnings season where you're generally seeing a lot of beats and you're generally not seeing great price action as a result of it. And I kind of think that NVIDIA will be more or less the same. I don't know if the stakes are as high on this report as the last one, but what we saw from the last earnings report with NVIDIA was the same deal. It was a really good earnings report. I think they beat every metric pretty solidly, but it wasn't enough to really get upside continuation. It kind of was like, think we might have traded down on day one, and then we bounced back a little bit and ended up kind of just being rangy and doing nothing. I would expect that a good earnings report from NVIDIA breeds similar price action. A phenomenal report can get you back above 200. Anything that's in line or weak probably gets you below the 180 support. But we'll see what happens on Wednesday.
All right. Another mega cap tech name, a Mag 7 name that's running today, Google. Google, G-O-O-G-L, Alphabet technically, but Google is up over 4% today after Berkshire Hathaway revealed their new stake in the company. So what do you think about Google here on that news and what it means for the stock?
Yeah, so Google has really been my favorite thing to be long in the Mag 7 space for months now. And it's played out perfectly. The chart's been great. Beginning of September here, off of earnings, just phenomenal continuation, digested it. They got another leg higher. Stock has been great. And the last earnings report was also excellent. They gapped it up, they sold it down, but it was extended. And now they've just been kind of digesting those gains. And you compare that to the NASDAQ, which has weakened out a little bit from its highs. And Google here is holding in and bull flagging perfectly. And then it gets the Warren Buffett bid, which is incredible because we all know that Warren Buffett is being extremely selective on what he buys right now. Everybody's talking about how much cash he has on hand, but obviously he sees some value here, and so do I. It's still, even after this move, the cheapest from a multiple perspective. And I think that they're a good bet because it's like, if AI works out perfectly, they're a leader and they've got a really good game plan for how they're doing AI with Gemini. If AI doesn't work out as well as everybody expects, yeah, they probably wasted some money, but that's going to be just fine for their search business, right? Which, by the way, is somehow continuing to grow even in the face of all the AI stuff. And then they've just got these other businesses like the YouTube business with the advertising that comes from it, which is the best streaming service that there is. I think it rivals Netflix and blows away everybody else. So you just got a lot going on, and then the cloud, and yet it still trades at a relatively cheap multiple. This is the one to own, and that's why Buffett bought it. So even here now, I would still say if you want to be long something in Mag 7, it's probably Google and maybe Amazon as a secondary to that, and maybe Microsoft right behind that one.
All right. You mentioned seasonality. So when we look at the market here on November 17th, typically, right, what you and I have discussed, a very strong month for the market over the next really 2 months, but it hasn't been that strong so far in November. I think you and I talked last week that the action at the beginning of November was setting up perfectly to like flush out the sellers and then, set us up really well for that rally that you would expect in November. As you say, because of seasonality, it's hard to hate the market here, even though you do hate the market here. So now that we're a week later and we got kind of another meh week last week, do you still think, this action has flushed out the sellers and we're going to get that seasonal rally that you would expect, or has that thesis of yours changed?
I do think that dips broadly get bought. Still. If we go back to the charts, the technicals here of this market have turned from bullish to what I would call neutral. So I have this game, and I think it's a very simple game that any trader can do, and it's something that I love to do, and I love to do it with the traders on my team, where you just look at the S&P, you look at the NASDAQ, and you look at the Russell, and you basically just ask yourself, bullish, bearish, or neutral. And I've got like a couple borderline ones. I do bullish, like neutral bullish, neutral bearish, and neutral. So I kind of give it like 5 categories. And you go through the technicals, and it's pretty simple. Are we uptrending and above all resistance levels? Then you're bullish. Are we uptrending, but we've broken below an immediate resistance level, but not? Sorry, we've broken back below a previous. We've broken back below a support level, but not like a major support level. Then you might be neutral bullish. Or if you're range bound, you're neutral. If you're breaking below a range, then you could be neutral bearish or bearish. And if you take a look at all 3 indexes and you play that game, it gives you just a general starting point of if you should be broadly looking at the market to the long side, to the short side, or long and short, because again, things are a little bit neutral. So That's one of my favorite games. And if we take a look at the S&P right now, if we take a look at the SPYs, I consider this to be neutral. Above, you can see that there's a level here at 680. Get me above 680, and I would turn full on bullish. There had been a really important level at 674. So right now, if the SPYs are trading between 674 and 680, that's my neutral bullish zone. Above 680 is full bullish. Below 674 down through like 655 right now is what I consider to be the neutral zone. Really, let's say down to 660 is the neutral zone, and 660 to 655 would be like neutral bearish. You get below 655, and then we're full out bearish. And at a certain point here, you could be looking at a trend reversal, by the way. It's worth noting that. We've been in a very clear, obvious uptrend. But then more recently, you have the all-time high here from October 29th. You've got the low that happened from our washout on the 7th. But this might prove to be a lower high here back on the 12th if we can confirm that with a break below 660. Yet, we haven't confirmed that. This market has not confirmed that it's a reversal. It's back into a neutral range. So neutral means buy dips and sell rips. Don't hold for trend continuation because you're not in a trend. Sure, if we get back above levels or below levels and you've got longs or shorts respectively, then you can get a little bit more greedy. But right now, this is not the time to be greedy. This is the time to kind of be wait and see. And if you look at the Qs, it's pretty much the exact same deal here. We got back below some breakout levels, right? The I think it was 613.50-ish. 613 to 613.50 was a really big breakout level back at the end of October. We're back below that level. So the Qs here are very much neutral. They might be building out a trend reversal. There might be a lower high if it can ever get really confirmed by a lower low. But we haven't broken back through some major previous support levels. We haven't confirmed a reversal yet. So the Qs here are also, they're very neutral. So I got neutral SPYs, I've got neutral Qs. IWM, you could argue, is definitely a bit more bearish. They got back below levels into the range to get more neutral. And then since then, they've broken below some more important support levels. The fact that we're below the October 10th low makes the IWM honestly bearish at this point. So 2 of the 3 indexes that I look at are neutral, and one is bearish. So what does that mean to me right now? It means I should probably be a little bit cautious. I want to look at that in conjunction with flow of funds, but flow of funds here are also a little bit mixed, because if we can stay a little bit weak, or we can increase volatility a little bit more than what we've seen, you're going to see some forced selling come in from like vol control funds and systematic CTAs, create additional selling. At the same time, November is the second largest month in the calendar year for corporate buybacks, and we're getting like $7 to $8 billion from the corporate buyback bid every single day. So the flow of funds are a little bit imbalanced. The technicals are very neutral. It's hard to have a ton of conviction, but broadly speaking, when you get a huge gap down to extreme extension like we had on Friday, or you get an opening sell like we had a week ago Friday into extreme extension, that's a buyable dip of extreme extension in a neutral market environment into support levels that you can take advantage of. So I think that bigger picture, we're kind of in wait and see mode here. I've got a million reasons. Well, really, I've got 10 kind of major reasons why you could be super bearish. But it doesn't matter how bearish you want to be in theory. If there's more buyers and sellers, or equal buyers and sellers, you're not going to go down. And right now, things, they look pretty equal. They look pretty in equilibrium. So we need time to move us forward to see if we can break some further support levels or get back below some previous resistance levels to confirm whether this neutral market is working its way towards bullish, in which case let's look for that end of the year rally. We're getting back above SPY 680, or hey, you know, there's really some cracks coming in under the surface because we're losing 655 in the SPYs.
All right, so overall you're leaning neutral on the market, but you yourself, like you said, you got a million reasons you could be bearish. There's definitely a stock pickers market. You know, you can't just see one trade move and say, oh, okay, now that whole space is going to move with that one name. It's just that's not working in this market. You really got to be picking the right stocks. So are there any charts that you individually are looking at in individual names that are interesting to you?
Yeah, I still really like the idea of being short kind of these momentum leaders on this market. So when you think about like the quantum stocks, the rare earth stocks, maybe some of the crypto related stocks, I haven't traded the crypto ones as much personally. I still like the idea, honestly, of pounding them to the short side as long as you're not chasing. At this point, so many of them have gone so far that they're a little bit chasey here, but I've got them all on the radar to short bounces. RGTI, 25 was my target, so I just got out of it. It was a great trade. We caught the whole down move on this thing. I don't think it's done going down, but this stock could really use an oversold bounce. It's just been getting obliterated. It's pretty extended away from the moving averages. So I'm watching the RGT eyes of the world to see if we can get a bounce back that can potentially be shortable. Or OKLO is one that I am short. It's not as extended. But this is one that I keep trying to hammer further to the short side, see if we can get a move back to $70 to $80 on this thing. I think is reasonable as long as you're not chasing price too much. If you look at like SMR, here's another one. I had been short this name back in the 50s. I'm out of it now, but I can't chase this short further at 2150. Even if I think it's going to 10, even if I want to be short this thing. I need the bounce back or the big bear flag or something like that to give me a good risk reward setup to get into it. So broadly speaking, I still like a lot of these zero revenue companies. Quad U is another one that I still have a short on. I want to see if this can break some other levels, or we have been looking at UAMI at a certain point. I'm out of that position, but this thing might set up again. I still think that these are generally going lower. And then in Mag 7 land, we'll see what happens with NVIDIA. But there's real winners and losers, I think, in Mag 7 right now. I hate how Meta looks and how bad it's been trading. It's been really gross ever since that earnings report. It's another one, though. I don't want to chase downside. I was really hoping a week ago when the market put in that bottom that the Meta bounce is going to be big enough to get it into the 640 to 660 area where I would look for a pivot high to be able to short versus. It's been so weak, it couldn't even bounce back enough for me to get that spot to be able to short. And here at 604, while I don't like it at 604, it's a little bit too extended to chase downside. But that's an AI loser is what that's turning into. That's still shortable on bounces. Oracle is another AI loser. It feels too chasey here, but bounce me back to 640, and I can look at this again on the short side. Where some of the others we mentioned already, Google is one I'd rather be long than short. Amazon overall is one that I'd rather be long than short. Microsoft's a little bit more neutral. If you can get above 512 to 513, I think it looks pretty good on the long side again. So I almost think you could kind of run a little bit of a long short book where while the overall market is neutral, you can be long relative strength and short relative weakness. And Meta and Oracle is where the relative weakness is, and Google is where the relative strength is.
Sorry, couldn't find my mute button. All right. Derrick is a real trader, so I do want to let him get back to that. If you'd like to get his free ebook, you can go to t3live.com/DOLive. It's an ebook about the benefits of prop trading, how you can work with Derrick himself there at T3 Trading Group. Again, he is the head trader with T3 Trading Group. And if you join the firm, you work directly with Derrick and his team inside the Pro Desk virtual trading floor. So again, that's t3live.com/DOLive. Derrick, have a great rest of your trading day. Good week. Good luck with NVIDIA's earnings report. And you and I will have a lot to talk about come next Monday because we are finally going to get a jobs report on Thursday. It's old data, so I don't know if the market will really care, but we're going to get that and NVIDIA's earnings report on Wednesday. So there's lots coming. So enjoy. Have a good week.
Thanks, Retta. Have a good one.
All right.